Hey traders, what's going on? Jamie Saettele here. Let me know that you can hear and see. Hold on for a second. Sorry, I have a little problem here with some of the tech stuff. Not to mention problems with this freaking dollar yen. Man. Gary, what's up, dude? How are you? Nice to see you back. Conwall, my friend, what's up? So we will certainly go through Conwall's stuff, which is, of course, the crude and copper, which he loves so much, and sometimes nat gas. As usual, I want to start out with some pre-planned things that I want to look at real quickly. So, yesterday, you ever notice how it seems it does not matter, it seems, what the hell is written. I like to say sometimes no one knows anything, but this 12.3110 level in US dollar, I mean, held to a T. I got thrown off yesterday, obviously. Had talked about yesterday was so weird. So gold tanked, bonds tanked, which means yields are up. And after a brief bounce in Europe, the dollar was crap all day. Yeah, it threw me off. And hopefully maybe you did better than I did, but I bailed on dollar yen probably at the worst possible time. And here it is up. It's about 200 pips, or no, not 200, but it's about like 120 pips from where I got out. Anyway, we'll move forward from there. So the thinking here on this is still, it's definitely still valid, right? So it's a good chart, obviously, to look at. You've got this major support. Did anyone else lose audio? Mark's saying he lost audio. Can you guys still hear? Let me know if you can still hear me. Okay. Mark, I think that's you, buddy. Let's see here. All right. Okay. All right. Anyway, type if for some reason people lose audio. Anyway, this is a chart obviously to keep in mind for several reasons. One being that if we do eventually end up breaking this area down here, then the next level is the election low. Okay. So there's that. The short-term chart, that's what I want to focus in on right now. So the comments yesterday were basically that, you have to consider the potential that we do break. And at the end of the day, it looked like we are going to break. And I don't know if this is like so far a 2017 phenomenon thing or what, but it seems that there's like this tendency for the last half of the U.S. session. So like after Europe closes, right? So like basically now into the end of the trading day when the regular trading hours for equities close, there seems to be this tendency for the market to move fairly sharply for that time of day, excuse me, in one direction, and then it's completely faded. It's been completely faded, right? So we saw that yesterday, of course, but we've also seen that, in prior days, and maybe I can try to quantify it. If I do, then I'll post something tonight. But it's just something I've noticed, so I'll try to quantify it to make sure that I'm not tricking myself. Anyway, we can use that knowledge today. So, here we are. We've actually come back into the US dollar is trading exactly unchanged on the week right now. Okay, the US dollar index. And this line was red in last night's post because it was kind of like that's resistance, and if we get back above the FOMC low, right, which was support here and more or less resistance yesterday, then it's okay to abandon the dollars going to hell in a handbasket narrative. And what I would do from here is there's two levels really to pay attention to, I think. One being basically 12,400, 12,409. Okay, 12,409 being the low from 112. And what we've got here actually too, this is the equivalent of a 10-day average. Okay, on a 4-hour chart, it'd just be a 60 period average. But the big level for resistance might end up being up here. Okay, the 12,450, 60 area. At least that would be the big test in my opinion. All right, you've got the horizontal levels up there, but you also have, right? You also have these parallels. And this is, again, this is the short-term chart. This is the 4-hour based on the June-September trend line, right? So actually drawn off here, which is actually the low before Brexit, and then the low back here in September 8th, and you essentially just have parallels there. And this median line obviously been pretty good at times, slipped below it yesterday, and then of course, had this big time rip today. But what would be the 75 line on here has really been pretty important, right? Even during this big move higher, you actually did have a little bit hiccup there. So I'd say that's a big spot to pay attention to if we get up into this region, but first level's here. So with that said, there are going to be opportunities on both sides of the dollar, in my opinion. And again, as long as the big thing is holding this, what's this dollar mix chart? The big thing here is holding this level, okay? And you can get opportunities on both sides of the market. So let's look at the various charts to see where you might see dollar opportunities for dollar longs and dollar shorts. So we'll start with euro. Real quick on the US dollar, on the index, right? So most people can't trade this. I think it's actually a CFD. So if you're in the US, you can't even trade it. So I mean, obviously I don't trade it, but it's very helpful to me on the levels. So like just knowing that we were right here yesterday and that there's the risk of this big kind of dump, right? Then I can kind of take that into account, right? But knowing that if we've turned up through the level and we've held the level, so now I know that it's okay to kind of look at and respect potential for dollar strength as well. So let's go to the individual charts, and then we'll look at some crosses. Then I'll take questions on commodities and anything else for that matter. So the euro chart, I think it's pretty. I think we're setting some good levels here early in the year. Look, the third square root 123 has been the high. Okay. Again, I was thinking 108.2050 is a bigger test. Obviously, you can still get there. At this point, moving forward, you can see just now actually kind of tested the 106.60 area. Okay, spike high here on the 31st of or 29th of December last year, and more or less it's been pretty good. Resistance and support, more resistance than support, I should say, but going back all the way to November. So there's a lot here. I don't really have any great structure to this. I mean, on the upside, right, the one that we've been working with has kind of been this one, or the one that I've been showing has been this one. Just not, I'm not sure how valid this is. I mean, I guess you could still watch for this 25 line here, but my thing is that if you get if you get down, being below where this consolidation that we had, you need to establish back above 107.11, 107.12, which was a high volume area, in order to suggest a good move higher. So to me, with the dollar and suggesting that we could bounce a little bit more, would be looking at 107.12 now as resistance. Okay. And support for the buy could be down at basically 105.60, 105.70. Okay. And that actually brings us back into play with, we now have the horizontal level, right? But but we also have this is the old parallel, right? So we got the parallel here, which was resistance again throughout December and everything, and was actually support on the way up. And that, again, an intersection there at some point, maybe a little lower, right? Some point next week could get you a really good buying opportunity in euro. Okay, so next few days, very nimble, obviously, very nimble, and could be a seller up at 107, 107.12, I should say. Here's another thing. After this week, seasonals turn higher for euro, more or less for 3 to 4. I should say 3 or so weeks. So looking for euro longs into a good level next week or even tomorrow is a good thing based on levels, based on the slope, based on seasonality. Okay, so there's a lot there for euro. So there's your euro levels. Another thing to be aware of with euro would be let's see where the 20-day average comes in. 20-day average is about 106. Okay. Again, this is a 4-hour chart, so the equivalent. The actual 20-day average is 105.97 right now, but that'll be higher tomorrow. So, we look at the 20-day average. If we can look at it this way, hold on. Let me just put whatever, you can see it. The 20-day average is the magenta line. Again, on a 4-hour chart, a 20-day average is going to be 120 periods. So 20-day average, if we say we had a trend change on the upside, a strong trend, first 20-day average touch, a lot of times is a decent opportunity. So it brings another level or another consideration into play, right? This was the Trump speech back, if you remember, on 111, and 20-day average spiked below it. Obviously, this all happened in a matter of literally seconds, but something to keep an eye on there. Okay, let's move on to British pounds. Pound obviously has pulled back some. Thought that it would actually pull back closer to 126.77.81. Daily reversal resistance is 26.77. And for those that do not know what I speak of when I say daily reversal resistance, because there might be some in here who are not familiar with it, remember, we're just talking about the high for the move and the close of that period. Okay, and that is right here. You can see that close. Actually, you have the high up here too at 26.73, and it's literally right on it. Okay, so you did have a high there as well. So cable, though, nothing's really changed for me from what was written last night, and that is, I'm looking for support on kind of the 2540s, right? So 2540s, you can see it's been resistance, before back into November. It was support in December, and just recently, as in like a couple days ago, it was actually resistance as well. So, we're starting to kind of hold a bit here, but that's the first area I would really look at, the median line to take this higher. Okay. So that would be cable, looking at the near-term picture at least. Let's look at dollar yen. Dollar yen kind of wanted to shoot myself after this dollar yen deal. 4-hour chart, couldn't get prettier than that. And what did I do? I freaked, and I didn't stay with it. Anyway, the move higher in dollar yen, I think probably ends up failing around 115, 115.08 is a square root level. You can see that was support back here on the 5th. So pay attention to that level. If we go down into a short-term chart, 60-minute, you can see that you can draw a very short-term fork on this, obviously, and you get good intersection with it. Well, 105 is going to be higher at this point. But this would be something to watch for a possible long position. So, I'd watch 114 for support now, or even down here closer to the maybe the lower parallel on this line, but this isn't. Watch 114.45 over the next hour or so. Basically, I want to trade, if I'm trading dollar yen over the next day, it's probably 114, 115. Okay, really good horizontal levels, obviously. 114, resistance here, breakout. 115, big resistance as noted back on January 5th. And then, of course, we can bring in here's the euro analog, but we can bring in the dollar yen analog. And still following it pretty well. It says that things can get pretty sloppy here over the next couple of weeks. So, dips, some rips, back and forth. Okay. Conwall asking if a 114 is a buy, where would the stop loss end up being? So that's a good question. Let's take a look. So what you'd want to do, Conwall, 114 would be your level to look at. This would be a thing where, look, I'm probably going to be looking for support at 114, 113, 60 even. 113, maybe 113.60. You can see this whole, so this entire zone, if you will, right? I can draw it on here for you. So this entire zone right here, the top of it's 114, the bottom of it is 113.60. Today's European low bar or at least the one that saw the big rip, is actually 113.60. So if you're going for a long into 114, or maybe an order just above 114, I'd probably want to have a stop under 113.60. Wouldn't want to see us get that back down to this region. Okay. But really, I feel like the big levels for the next couple of days are 114 and 115, with potential at some point, for 116 plus, although well, you know what? I'm not going to say it's a stretch because we've got to listen to the chart, and the chart here has been, has been correct. I should probably learn not to question it too much. So yeah, 116, 115, 114 levels that I'd want to trade. Call it 113, kind of 50, 60 invalidation on immediate upside, with 116 plus, call it a stretch target on the upside, if you will. But I think that probably the more likely scenario is that we go into a period of fairly sloppy range trading, more or less between 115 and 114. That's how I would look at this. All right, moving on. So Aussie dollar, probably pretty late to the game on this one. You are holding a pretty important level, but if this level goes, it kind of really goes, right? So you've got 174, 75, 17, 20. Highs up here. That's the December FOMC level. Same area, basically a high into consolidation. Back on the 12th, got the breakout through it, have come back, have basically been testing it, the so-called breakout level, for a week now. So you've got a couple options here. Obviously, I'm sure a lot of people are looking at this as a head and shoulders pattern. It may very well be. The one thing for me is that the momentum on this is actually still, okay. What I mean by that is you've got 4-hour RSI down here, which kind of continues to, turn. Yes, you have massive divergence. All right, but as we know, you can get divergence that lasts for quite some time. So you've got big time divergence. Still can't dismiss one more high, in my opinion, before the big slam, right? But look, risk is like nothing here. You're talking about 75.10 under here on a stop on a long. So, so be it. So Aussie's one where I really don't mind it just because the stop is nothing. But me thinks that we should pay attention to these long-term levels here, okay? So the long-term levels, again, here we are, right? Testing. The much longer term levels for resistance, and where I think you'd actually really more, kind of look for a bigger pullback, or it's actually up in the 76.50 to even 77 area. All right, so that's where things start to get interesting. Whether we get there on this run, I don't know. I also think that the next big buying opportunity for Aussie could be on this line here. And again, we've talked about this, but this is a trend line from 2016, basically January to December. And then a parallel, you can see crosses here off the summer lows. It crosses the low into November. That's an area I would watch for support, right? And, it could be just below 74, it could be just above 74. It really depends on when, when it gets there. So that's one that I really kind of have marked down, if you will, as a very interesting long spot for a very big, bigger kind of long. But in the meantime, it's still holding up here, right? And yes, I see the head and shoulders. I'm sure a lot of people see the head and shoulders. But head and shoulders have been known to morph into other things as well. All right, Kiwi dollar. Here's one that really pissed me off. I was actually shorting yesterday into the reaction on the CPI, and I was like, I don't know, feel too good about it after it kind of was not doing a whole lot. Got out, and then here we are. A lot lower. I've erased everything from yesterday. But Kiwi itself actually has come into its zone too. Just a 1 day reversal, but 1 day into a dip. So here's Kiwi resistance, former resistance, again high on December. That's the FOMC high, and then you have the high here from 117. So there's a lot here to mess with. Kiwi dollar, again, I think that the better place to be looking for a short position is more up into 73, 73.40s and 73.50, and that's a really long-term parallel, okay? Going back years and years and years. So it's kind of what I was hoping for, was up into here, although you do have this trend line. But the big one is up here in the 73.50 region. What about buying a Kiwi dip if dollar continues to go higher? Well, first I'd watch for resistance at 72.60. All right. But the next dip, like a big dip for Kiwi, might be on this. So here's your trend line down here, parallel. You can see here crosses the high was support for a time back on the 16th, 13th, and 16th of January, and kind of lines up with these lows down here, just above 71.30. So if we are putting in a bigger peak up here, then yes, the 71 kind of 30 region would be where to look. But watch 72.60, okay? If we bounce up into there. Okay, dollar CAD. This is one that I like a lot, and I like some of the crosses. I was talking this morning on Twitter, sending out you guys some alerts, and said, watch dollar CAD down here. It really is a big spot. So before we look at the short-term chart, let's just take a look at just a daily chart with like nothing on it, right? All right, so everyone got bearish on the wedge, right? Okay. Everyone got bearish on the wedge. This is still the area to watch for your resistance, probably. I didn't snap those lines. All right. So this would still be your area to watch for resistance. At this point, it's a little higher than 32, 32.10. Playing dollar strength or potential dollar strength, I like doing it with dollar CAD because this area down here, let's just say right above around 130, really a big spot, right? and you can see it has been for a long time. You've got the low down here at 30.78. All right, you've got these lows down here. This is kind of an area, if you're going to get some sort of a base, this would seem to be about as good an area as you can get. Okay. So yeah, it looks like dollar CAD wants to fall off a cliff, but again, you have good horizontal levels here. If you redraw the channel off the highs, you do have a hold here. Okay. And we've been holding for today and yesterday. So you do have some good areas or some good considerations for good support down here. So I do like the idea of dollar CAD higher from here, although again would be looking for potential failure, or be aware of potential failure at several particular areas, notably 31.80 talked about yesterday, high volume level. Then this trend line, okay, and then of course this high close 33.10, which is the high from 32.90 is the 111 high. But from here, even as a scalp, just for a couple days, I like it. See if you can get it started. That would be a dollar CAD chart. So there are other CAD crosses that look interesting. Euro CAD essentially is just in this sideways pattern, which may eventually give way to a deeper drop. But in the near term, we actually hit daily reversal support today, which is 39.62. Okay, so you could see a hold here for Euro CAD, although the big resistance for Euro CAD is going to be back at 141.80. Couple reasons for that. It's the low from last April. Okay, then you can see it was kind of a base back here. So this consolidation, that's the close right here. Okay, 39.62. So I'd be looking for maybe some consolidation here. Maybe we go into a triangle, right? A little A, B, C, D, E, something like that, and then spill out to the downside at some point later. But yeah, this is a good area, or a good horizontal level to watch for Euro CAD as well. Okay, we can move on to Pound CAD, is one that we talked about yesterday, and this actually might be one of the better ideas out there right now. And we talked about the RSI in last night's post on the 4-hour, kind of the hovering around 50, right? And the equivalent of the 10-day average, which appears to be pretty good in Pound CAD. Resistance, support, right? Resistance on the way down. So I'll be watching for a tag of this. Obviously, it could come at a much higher price because you could end up going a little sideways here in Pound CAD for a bit. But you've got a big run up, some sideways trade. Let's see if we can tag this parallel at some point along with the 10-day average on Pound CAD. So, wanting to be kind of long pound dollar anyway into some weakness. And then thinking that dollar CAD could be building a base at above the 130 figure, you have a nice idea, I think, for Pound CAD. So it's a cross that I really haven't looked at or traded in quite some time. But let's remember that we had a big time reversal in Pound CAD last week. If I pull up the J spike indicator on Pound CAD, okay, you can see what we did here. All right. So lower volatility environments probably not going to work out too well, right? You got some false signals back here, 2013, but you do get a lot of them that work really well. I mean, spike here, nice rally, some tops, lows, tops, false, low, minor top. That would have been false. That would have been false. That would have been okay, at least bottom of a support. This one was good, and of course, the absolute high, which was on China data, or the Chinese stock market crash back in August 2015, when a lot of paper versus commodity currencies ended up topping. And then before Brexit, that probably the worst signal ever, but you probably wouldn't have wanted to take it into Brexit. And then here, so yeah, interesting long-term picture on pound CAD, right? What's this trend line look like down here? Oh, and we got a trend line. Look at that. You don't need any of this stuff. You just need the trend line. See? Look at that. Pound CAD, trend line. Maybe we go back up to here. 175 on pound CAD. So yeah, this is a cross that I will very much be keeping an eye on, going forward. Pound CAD. Okay, pound yen is also interesting. I want to be looking at some yen cross or some pound crosses because it's where the volatility is right now. So pound yen. Okay, so remember the long-term levels, right? Okay, we're still below it, but my guess on what happens here is that you end up getting a kind of a rally up into, I would watch 145, what is that, 145.40 or so. Yeah, 145.40. Get rid of some of this stuff. Hold on. 145.40, okay, which is a low here right before Brexit, actually. And it's also the high of the year so far. It's the first day of the year, 1-1-3. All right, so you could get some exhaustion near term up into 145.40, 145.60. All right, that's just where the parallel is. So we're not very far from there. We're at 144.20. Obviously, pound yen doesn't take much to get, 120 pips, right? So I'd be looking higher from there. Support, if you're trying to trade a short term, 43.70 is yesterday's high. And then if this, the idea being that if you're working in a nice base for a big move higher in cable, that you look for the pullback to basically hold 42.15. Okay, 42.15, as you can see, you've got the low here, and it was resistance for like 4 days back here. So you're essentially looking for, what was once support and held as resistance to provide support again. Okay, and it could end up being on this median line as well. So yeah, I would watch for those two levels over the next couple of days in pound yen. Basically 145.40 to 60, and then eventually coming down maybe into 140.160, 142.15. I say 140.160 is a lower end, just because you do have a square root level there, and you have these little highs over here back on the 11th, 10th and 11th. Okay, so very good levels to work with on pound yen as well. Are there any questions? I think I've gone through pretty much everything that I wanted to, or that I had. Are there other things that folks want to look at? A lot of times we have Conwall, but it looks like he left. He always likes to look at copper and crude. So maybe I can go through those anyway. Crude, okay, sure thing. So that's Raf asking about crude. All right, so this is, we'll go to a 4-hour chart here. We've talked about this one a good deal as far as being the really the crowded positioning on crude oil, right? But it's still holding up in a very bullish manner, right? So we've got the COT, which shows, again, a record speculative long position, okay? Now, it does not mean that the market in question has to immediately reverse, right? Like essentially you had a record long position in crude for a year before, back in 2013, June, all the way to June 2014. It took a year of record positioning to finally start unwinding, but once it unwound, it was absurd. I mean, it was crazy, okay? Crude absolutely got obliterated. So we have a record positioning, we have record positioning now, as you can see, but price does not seem to want to punish the longs at this point. It just hasn't. So I don't know if that's going to change. I don't know, why that would all of a sudden change. But you had this big reversal here on the beginning of the year, 1-3, came down. You're essentially holding support, and nothing's happened so far. So with that said, there would be, let's see, it's a daily chart. I'm going to see if there's anything long-term that comes into play. We've already broken through that. Oh, Conwall's got no audio. Okay. Well, with crude, first of all, your closing high for the year's up here. Okay. So 54.29 is your obvious, near-term resistance area for crude oil. And I want to show you something else besides just the price chart here. This will be a momentum chart. So do you see we've gotten all these these signals of divergence up here? All right, these signals of divergence. If you close back above 54.29, the year opens 98 on here, but if you close back above that region, you're going to get another divergence signal. So essentially, this is the futures contract, so the price is a little different, but essentially you're going to have major resistance, or a major hurdle to clear, I should say, at 54.29. Okay, and the close of that, what's that open? The year open there, open. Actually, the year open on this has already been hit. Okay, so it's 53.87 to 54.29. Okay, Um, Gary asking if I look at SSI. So we can pull up some SSI here. Here's dollar yen. Well, they just turned short. Hold on, let me type in these levels real quick though for Mr. Mr. Conwall here and everyone else. Okay, so crude resistance 29. Crude support, I would put it, oh crap, I didn't mean to do that. I would put it up here. Put you down here on this close, 51.36. And crude support, 51.36. Okay, and that would be the low day close or reversal support, whatever you want to call it, which is the close of that bar. Okay, so that's the levels I would look at. I would not want to be a bear, any sort of committed bear, meaning a position with price over 54.29, because at that point you're going into new highs and your median line comes into play at a much better level. So yeah, I wouldn't fight with it to, above 54.29, put it that way. All right, so we had a question on SSI, and all is quiet, it seems. Stabilizing, it seems. Everything's stabilizing. Not a lot going on. Where was I? Oh yeah. Okay, so here's SSI. Okay, so here's a daily chart of SSI. Look, SSI is going to work in a trend. Public goes short the day after the election, right? They stay short literally up until right here. But short term, so if I go in to a 4-hour chart, you can see short term. So like they flip to a long position here, right? On 1.5. Well, that the next day was actually a big up day. In fact, you had the biggest, you basically retraced the whole thing, right? So they stay long then through this decline, right? And then they turn short at the top. So in a range, they do very well, SSI. Okay, SSI just being, the retail, all the retail traders here on FXCM at least. So, it's not like it's like anything, right? It's like to me, it's kind of like a moving average in the sense that, yeah, price crosses above X moving average, it's a buy, and but in a rangy market, you're going to get whipsawed to hell, right? So it doesn't mean that, if you're expecting a trend or something, then sure, then take the breakout signal or whatever. Like in this case down here, and there's a way that we can try to do this too. So you had all this consolidation back here, right? Well, sometimes I've written about the what's it called? A little RSI thing here. So the amount of time that RSI spends between, say, 30 and 70, right? Well, so when we had the breakout, we had spent 89 months, basically, or 89 days between 30 and 70 on RSI, indicating, it basically been the tightest consolidation we had since here. Okay, now that breakout would have failed, obviously. Okay, the next tightest was here, which was back in August 2014. That would have worked. Okay, so really long consolidations tend to get bigger moves. This is where Euro comes into play, by the way, right now on this. The current consolidation in weeks is 94 weeks, meaning that we haven't had a strong directional move in 94 weeks because RSI has been between 30 and 70 ever since the low. The only longer consolidations really is this one that led to the full-on collapse. Okay, back here on the low, the consolidation that gave us the low in the early 2000s was of similar length, actually a couple weeks less. So with this knowledge here, I'd be more likely to look at Euro SSI, right? And more want to be on that side. In other words, the short side, or the short side, but they're short SSI, so I'd rather be long. That's what I'm trying to say. They turn long actually the day after the low, and they've been short. I keep getting mixed up. They turn short the day after the low, and they've been short ever since. So, as long as that's the case, I kind of like buying weakness, and we talked about that was the first thing we talked about in the. I have a small long position on right now, actually. As you can see, I'm in the red, but I, would be looking at support. We talked about down in, I think the area we really talked about was 105.70. Yeah, 105.68, right? As being the ideal level, because you're now below 107.12. If you get back above 107.12, then maybe consider the long again. But yeah, that's how I'm looking at, SSI here for Euro and yen. So basically, if you're going at, we kind of expect a sideways period of range activity, don't we? For dollar yen, we kind of think that we could get something really nasty and then get a bigger move lower. So, if we get some of this, you're probably going to want to stay out of just a pure trend-based strategy like SSI for the next couple of weeks. Okay, copper. I was going to do some copper real quickly here. Copper. Did it again. So you actually had a attempt on a breakout up here, right? Which has failed so far. I still thinking that you're in a consolidate. Same thing as last week. I still think that you kind of go into consolidation here after this huge run. Usually you consolidate for a bit longer than people think, but after a run like this, usually gonna consolidate for a period of time. So if I look at a 60-minute chart, I'd be looking at this line as resistance because it's been resistance, right? So basically look at this line as resistance. So up here, I'd say, about 270.90 or so. Say about copper. $270.90 resistance, and I'd still look at support. I'd say down at 252.30. And the reason being, that's the daily reversal support. That's the low day and the close on it, right? So that's what I would be looking at for copper. Okay. Are there any other questions that I can answer? Anything at all? Went through a lot of different charts today. I think we've got some really good levels to work with. The pound cross is probably the most interesting at the moment, right? Given the median line and really the cycle low that we had. You know what? That's one more thing. That's one more thing I want to look at and show you real quick. So the British pound cycles, right, that we talked about. Where do I have those cycles? Big cycles? Is it here? Yeah. All right. So this was the chart from from the special report. Oh, Gary's got a good question. Sure thing. Let me get to that in a second. But we talked about when I talk about the pound dollar with the quarters between the highs and lows. Well, you get from low to high, let's say, with the low to the next move higher, 137, 148, it's 1100 pips. Okay. This is 2009. I mean, the next quarter, you didn't stop for 3,000 pips. Okay. This back here, about 140 to 160, 2,000 pips, that's 93. Obviously, the 84, 85 low blew everything out of the water. 1975, okay, fine. Point being, we're basically 600 pips off the low. Okay. This is peanuts compared to this stuff. So I think it's good to look for bullish opportunities on pound. Basically is what I'm trying to say. So I'll leave it there. Gary saying about the gap fill, like how do you play it? How do you normally play it? Is it just resistance support or a play of some sort? Well, it can be, right? It can be. So like here's your chart, like here's the gap, right? Here's the gap, okay? And yeah, a lot of times you come back into it, you'll fill it, and people just sell it, and that's it. In this case, a little different, I guess, because you did have, I think, because it's just 115 is just more important. It just is, right? It's where the market's traded, like 115 back here, even from a median line standpoint or a structural standpoint, 115 does seem to be a little more important. So again, I don't say there's a cut and dry way to do it. I mean, if you wanted to, I guess you could just put a gap fill entry, 114.55 short with a stop above 115.60. I'd rather be shorting into 115 though, and then, kind of play the range, which is what we've kind of laid out anyway. But I'm not a big guy on play. I use it's a point of reference. Like I'll say, oh, there's a gap here. A lot of times the market goes back to fill it, but not always, right? That's why I put the target for the long at 114.55, even though I bailed on it. But yeah, it's a good reference point. So it's like good to use for a target. I think it's good to if you want to trade back into it, right? You can use it as a target. That's probably the best way I would do it. I wouldn't necessarily say, oh, you've got to, the market's, gonna go to it and then immediately reverse. Doesn't always work like that. Sometimes it does, but not always. In this case, I'm not putting a whole lot of stock in it. So I personally don't have like a strategy that I use for these, the gap fill and everything like all the time. All right, so here we go. We are getting, as you can see, wondering if we're going to get the late day US move in one direction. In this case, it would be dollar down. And we'll see at the end of the day if we end up getting the whole thing retraced tomorrow. It seems to be a trend this year so far. Anyway, all right. Everyone take care. I will get this archived and up for reviewing ASAP. And everyone have a super wonderful rest of your week, what's left of it, and of course a great weekend. All right, take care. Bye.